Hello, everyone. Happy New Month to you all, and a massive welcome to Forex Morning Mastery, our midweek review session where we hope to unravel the latest development in the financial market and, of course, use that historical data to prepare ourselves for the second half of the week. My own name is Sheriff Daramola, and I'm absolutely buzzing to kick off October with you all. It's a brand new month, and in fact, this means a fresh batch of opportunities in the currency market for us all. And I'm particularly excited about what this one actually holds as October's last trading month of the years are usually characterized with some high level of volatility due to major key players rounding up trading activities for the year. And for those joining us for the first time, welcome aboard. Forex Morning Mastery is your go-to live session for insightful Forex market updates. We usually run this 3 times in a week, that is Mondays, Wednesdays, and Fridays, to dive deep into the key assets we do monitor during the course of the week, reviewing the latest market development and set ourselves up for the trading day ahead. And it's important for me to also mention that this is not a signal service platform, but instead an educational avenue where we come together to have a deep understanding into what is going on in the market, that is the behavioral patterns of market participants, through the lens of price action and fundamental analysis. I encourage us all to engage in the comment section, and if you have any questions whatsoever, feel free to always drop them in the comment section. I'm here and willing to be of help in that regard. So lately, a lot has been shaking up the market in recent times. In the global landscape, we've seen geopolitical tension escalate in the Middle East with Iran's missile launches, and of course, Israel has strongly warned of retaliation. And of course, this has stirred up a lot of interesting development in the financial market, which of course has given us some interesting opportunities during the course of the week. We've done pretty well across the asset we have been monitoring, that is the USOILSPOT, the GBPUSD, and of course the XAUUSD, where we were able to accumulate some significant amount of profit. And the latest geopolitical tensions in the Middle East has obviously steered some volatility in the market. We saw the USOILSPOT pushing price higher on supply disruptions fears from this particular area, while the GBPUSD remains cautious, weighed down by risk aversion amidst this global tension. And of course, we were able to join some bearish opportunities in the last couple of days, and it appears that buyers are beginning to gain some traction. Now, the question going into today is, will the pound sterling leverage on this platform where it is to continue the uptrend move? That we will be looking at in a moment. Then on gold has once again proven its safe haven appeal as the current situation in the Middle East has continued to support the ascent of price, rallying in response to the uncertainty that is likely going to come in the days ahead. So today it's quite an interesting situation for us all, and we are going to be delving into the chart, looking at the positive and negative drivers for every asset on our watch list for today. We're also going to be identifying how what areas and zone we are going to be buying or selling any of these assets, looking out for how to manage the existing position, and of course look at the potential possibilities that will happen around this market. So if this resonates with you, I encourage you to stay tuned in, as we will be delving into the chart in a moment. And of course, you do not want to miss out on the valuable ideas we will be deliberating on today. Oh my god, I think I have to come back. I'm having some technical issues at the moment, so please give me a moment. I will be right back. All right, so I'm sorry for that break. I had to ensure that I sort out this issue so that we do not have any hiccup during the course of the session. So with that said here, let's get started and unpack all of this development we are going to be looking at. Are we ready? All right, so the first thing we normally do every morning is to ensure that we keep tabs with the fundamental factors that have been and will be driving the sentiment in the market today. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, giving us valuable information needed and, most importantly, timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we're looking at for this week, we have been focusing on high impactful event from both the United States and the United Kingdom economic docket. Now, for days when we do not have any high impactful event, we include mid-tier economic features so that we can have a broader view into what will be the driving factor for market participants on that day. Now, taking all of this into account, we've had a bunch of impactful events during the course of the week. Like on Monday here, we had the GDP product quarter 2 from the United Kingdom. Remember, we had this for the United States last week, which obviously came in very positive, shows that the US economy has been resilient. Now, for the UK, we had something on Monday. So for those of us who are not familiar with what a GDP actually is and what its implications are as regards to what the asset we are looking at, well, this data here is measures the total value of goods and services produced within a country's economy. And it is considered to be a key economic indicator that gives us an insight into how well the economy has expanded or contracted in the last quarter. Now, from the look of things here, and judging from what happened during the previous quarter, the UK economy expanded by 0.6%, and market participants were looking forward to the same expansion at 0.6%. But unfortunately, we saw data coming in lower than what market had expected at a 0.5%. giving us a deficit deviation of 0.75. Though this data is a little bit lower than the expectation, however, it still shows that the UK economy expanded somewhat during the last quarter. Then on that same day, we had a couple of speeches from Fed officials, from Bowman to Bostic, and of course we also had a speech from the UK Deputy Bank of England Deputy Governor. But the major highlight for that Monday session was that from the Fed chairman, where his remark was more or less, let me say, hawkish somewhat, in the sense that he knocked down the idea that the Federal Reserve will be cutting, there was going to be a large or huge cut for the month of November. So it said it's going to be a gradual easing process, which obviously has reduced the sentiment in favor of a 50 basis point cut. And as a result, we saw the US dollar gain some traction at the beginning of the week, resulting in that bearish momentum we saw on the British pounds, and of course the USOILSPOT, and of course the XAUUSD was not really in alignment with the USD this week so far. Then yesterday, did we have anything? Okay, yes, we had some impactful event as well. From the United States, we were looking at the ISM manufacturing PMI. For those of us who don't know, this is a data that measures the health of the manufacturing sector in the United States. And when we are talking about PMI, this is an index that ranges between 0 to 100, where if the data comes in below 50, it shows that that sector contracted during that month, and if the data comes in higher than 50, it shows that that sector expanded, which obviously will bring some positive traction in favor of the currency asset of the economy we are looking at. Now, talking about the ISM manufacturing PMI from the United States, the data came in below the market expectation, which was at 47.5, giving us a deficit deviation of 0.52. And the fact that this data is way below the 50 mark, it shows that the manufacturing sector in the United States has been contracting. In fact, things has not been looking very rosy for the manufacturing sector in the last couple of months. Then another data that also gave us an insight into the economic outlook in the United States is this labor-oriented data, that is the JOLTS data, which measures the number of job vacancies in the United States. And it's usually considered to be a positive news if the data comes in higher than market had expected. And obviously we can see what we had here. The actual data came in at 8.04 million, which was higher than the market expectation at 7.655, and of course higher than the previous month, which was pegged at 7.71. So with that, it shows us that the US labor sector is resilient at this point in time. And for those of you who listened to the Fed chairman's speech on Monday, he did talk about the fact that the data from the labor sector will determine if the interest rate cut will be high or low for next month. Now, and from what we have from the GOLTS, it's giving us signs that the labor sector is doing very well. So the tendency of its 25 basis point will definitely increase in the market. Now, we're still looking forward to more labor-oriented data this week. We are still looking forward to the NFP, the average hourly is coming on Friday. And of course, we are looking for one today too as well, which we will be talking about in a moment. Then we also had some bunch of speeches from Fed officials in the last 24 hours, which I'm yet to have a detail into what they talked about. But before the end of today, I should be able to have something. And during my commentary tomorrow morning, I will be updating you on that one. Then today, Wednesday, October 2nd, we have one impactful event to look out for, and that is the ADP employment change. This is another labor-oriented data which everyone will be looking forward to. As we all have had, the Fed chairman says that depending on what the labor sector is doing will determine if the magnitude of interest rate cuts will be higher or lesser than the previous one. Now, for those of us who do not know, the ADP employment change is a monthly economic report that provides the number of new jobs added in the United States private sector. Now, it's a preview of the official jobs report, and strong numbers can actually boost the US dollar as this will signal a healthy economy, while weak number might put pressure on the dollar by suggesting slower growth in the labor sector as well. So we are going to be looking forward to this data later today, and this is going to be coming up in about 4 hours from now. So it's important that we mark out the timing of this event so that we can be on standby to react to take advantage of the immediate market reaction from that report. Then later on today, we are going to be looking at a bunch of speeches from the Fed officials. We have Amak, we have Musalem, we have Bowman, and we also have Barkin, all of which will be running through from about 4 hours from now. So we want to be hearing what they will say, especially after the Fed chairman spoke on Monday. So whatever they say will either buttress what the Fed chairman had said or probably negate this. You know, these are Fed officials that are members of the voting committee. So I think there are 8 of them, and whenever they're about to make an interest rate decision, they come on board and vote, and the majority carries the day. So whatever they say in these speeches will give market an insight into what their individual interest rate decisions are, and this will obviously give us an insight into what is likely going to come in November. And this is what the CME Watch Federal Watch 2 usually use to gauge the sentiment in the market. So definitely everyone will be looking forward to this data, as it will be playing a significant role in in moving price action for today. Now, in as much as we are on Wednesday, we also want to take into account the anticipation of some other event coming up tomorrow. Since we are not going to be having our live session tomorrow, we want to be looking the ISM Services PMI, which obviously this sector has been doing very well in the last couple of months, and expectations are that the data may come in higher than market had expected. Then which other one do we have here again? Okay, we have the initial jobless claim, which is also coming up tomorrow. Another labor-oriented data giving us an insight into the performance of the labor sector in the United States. So besides this, Friday is going to be the main day where we will be looking for the average hourly earnings, and of course the almighty non-farm payroll will be bringing in some high level of volatility at the end of the week. Now, with all this being said, let's dive right into the chart and let's see what is going on from a technical standpoint. And one thing I usually say here is that the anticipation of this event has an influence on how market participants will behave, and the behavioral patterns of market participants will reflect on the chart as price action structural patterns that we can use to strategically position ourselves for the next move. So with that being said here, let's dive right into the chart. And as usual, the first asset we are going to be taking on this morning is going to be the USOILSPOT. And on the USOILSPOT, we've had quite some interesting situations here. I don't know what happened. Why? Okay, I think this is a 5 minutes time frame, so we're supposed to be looking at the 1 hour time frame, which is our execution time frame. And on the USOILSPOT, we've had quite some interesting situation during the course of this week. It has been a roller coaster of buy at the beginning of the week, which did not do very well. We had a couple of stop losses on our buy position at the beginning of the week. Then we had the privilege of joining a bearish momentum on Tuesday before that strong bullish traction came in yesterday. Now, before we go into the technical details here, let's look at the drivers, the major drivers that influence strongly the sentiment in this market. Now, talking about the USOILSPOT, first of all, it is obvious that the Iran launched missile attack on Israel has raised fears of supply disruption in this region at this point in time. Remember, Iran is one of the major suppliers of oil in the world. I think they do about 1 to 2 million barrels per day. And if with this attack, we may likely see some sanctions come into Iran, and this could even further escalate into regional tensions. Maybe some other allies could come into play. The US might come into play, and this could blow out into some phenomenal event, which could influence the price of oil to the upside. Now, in fact, this is a broader conflict, and potential crude supply could be interrupted along the line. And we further learned this morning that Israel has warned that they are going to be retaliating, and this has further heightened concerns about a regional war, further boosting the potential of crude oil prices due to supply disruption fears. So for me, I still think that the path of least resistance for the US oil at this juncture is looking very bullish. And in addition to the geopolitical tension was the US crude oil inventory, which was released yesterday. We saw a drop of about 1.5 million barrels for the previous week. And when there is a drop in crude oil stockpile, it shows that the demand in the market is way higher than the supply. And from our simple economics, when the demand is high, what happens? Price will definitely rise. Now, in as much as the path of least resistance for US oil remains bullish at this point in time, we cannot ignore the less dovish remark from the Fed chairman, who has pushed back against expectation of another big rate cut, which could potentially weigh in on the US oil prices. Now remember, the US oil spot is a US dollar denominated asset, and whatever happens to the US dollar will definitely influence the US crude oil. Now if the dollar, due to this potential small rate cut that is expected based on the Fed chairman's speech, we may likely see some increased value in the US dollar, which could make the crude oil more expensive, as other currencies converting to the US dollar will be very difficult, and it could affect the demand in oil prices, hereby exerting selling pressure on this particular commodity. So as a result of this, we need to be very careful. We are going to be weighing into all these two dynamics, and let's see how the market is digesting this information, and the structural patterns we see on the chart will give us a clue into what they may likely do and give us an edge to capitalize on. So let's go back right into the chart, and on Monday here we talked about a very interesting situation. Let me scale back up into the 4 hours time frame so that we can be on the same page together. So I talked about something here on the 4 hours time frame where we had a descending channel. Remember, we talked about this on Monday, but the most important feature here is the fact that price action was sitting above that demand zone between the $66.25 level and the $67 area, which happens to be our key level for this week. And of course, you know, when price action is above a demand zone, we want to be looking out for patterns and structures that support the idea of buying. So like we said on Monday, that if we are going to be selling, we want to move our stop losses accordingly when price moves in our favor, as buy pressure could resume at any point in time since we are within buyer's territory. And lo and behold, you saw what happened yesterday. We saw that engulfing candle, bullish candle, spring out of that $67 area after forming a reversal setup, which was actually in alignment with our expectations from Monday's session. And since that moment, price action had continued to rise. And remember, we had multiple levels which we did identify as entry points to maximize the potential of the bullish move. So we had the 67.85, 68.60, and of course the highest level at the beginning of the week, which was the $69.20 level. And at this point we have a minimum of 3 buy positions in profit. That is, if you did capitalize on all of these positions, where the first one is running with over 350, second one is running with over 290 pips, and the third one is currently running with over 230 pips. So we are roughly into about 1,000 pips on the US oil spot, which makes the US oil spot one of the most profitable assets on our watch list for this week. So as it is right now, we for those of us who still maintain our buy positions, that is, if you still have your buy positions running, it is high time you want to be moving all stop losses. Let's secure some profit at this point in time. And if you would ask me, I will be suggesting that anywhere around the $70.75 level and the $70.50 area seems most appropriate to move all stop losses to. Remember, we do want to be giving enough breathing space for price action to move around, just in case we see some level of volatility come in, and we will still be in the trade to hold on to that uptrend scenario. Now, with a secured position at this juncture, what is our next line of action today? What are the chances that buyers have, and what are the chances that the sellers also have in this market? Now, first of all, the first thing I observed this morning is the fact that price action has been finding selling pressure along the resistant line of the descending channel we identified on the 4 hours time frame. And look at what happened here yesterday. We saw when price got into the structure, we saw a sharp rejection of that on that area, and in the last 2 to 3 hours you can see price has been consolidating within that particular area, making it a crucial area to look out for trading opportunity today. Now, the question going into today's session is, will this area become a platform, a new platform to find new highs? That is the breakout retest of that descending of that resistant line of the descending channel to find new highs, or will it turn out to be a false breakdown where continuous selling pressure below the resistant line of that descending channel could send price crashing back to the downside? So in order to help us navigate this current market dynamic, I have a simple trading setup which you can see here, and it's an uptrend continuation pattern in the form of what we can call the ascending triangle. Now, to give a visual representation of what I'm talking about, well, taking into account this impulsive move, you can see we have an horizontal line, which is the resistant line of that ascending triangle, and then we have the hypothesis here, which is the ascending trend line within that area. And of course, for this to be confirmed, we need price action to break out of the structure, retest it to continue that uptrend move, and this is exactly what is going on right now. I did have a buy stop order above that structure in order to maximize the potential of that bullish move, and of course stop losses will be way below the previous low, maybe around the $70.65 to $70.50 area, while we continue to monitor price action around this area. So we are looking at between 60 to 70 pips of stop loss on this one, while we give enough breathing space for price action to move around. Now, buying above the $71.40 level at this point in time is reasonable. However, if you missed out on this position, you want to exercise patience, and let's see if the market will give us a second chance in the form of price coming back to retest the structure to continue that uptrend move. So this is how we are going to be navigating any bullish expectation in this market today. However, in as much as we're looking out for buying opportunities, you know how we do it in this community, we also want to keep tabs with the potentials that sellers can also come into play. Remember, I told us we are at a crucial juncture in this market, an area which shares a confluence with the resistant line of that descending channel. And remember, resistant line of our descending channel are always area for selling niche whenever price comes into that area. Now, this old breakout we see here, we cannot ignore the possibility that it could turn out to be a false breakout where price dropping below the trend line, the resistant line of the descending channel, and of course the trend line here could incite selling ideas. So if price drops below the structure, I would like to see price do some retest of structure to confirm that buyers have lost the momentum, welcoming selling ideas from that particular area. So that is the only condition that will make me consider selling the US Oil Spot today. So let's see how this is going to play out as market participants anticipate the ADP employment change coming up later today. So this is my simple view on the US Oil Spot. I hope I made myself very clear, but if you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 10-15 seconds off. Let's see if there are any questions, and do not forget to give that video a thumbs up if you have found this content helpful and useful in making your independent trading decisions. And don't forget to mark out these levels on your chart, as you are going to be needing them as a reference point to guide your independent trading decisions today. So I'll see you guys in about 10-15 seconds from now. Stay tuned in. Okay, I see you, Wakocha Kingdom. Good morning to you. Happy to have you around. Happy new month to you. All right, so in the absence of no questions, I want to assume that we are all on the same page. So, with that said, let's move on to the next asset on our watch list. Stay tuned in. So the next asset we are looking at is the GBPUSD, the British pounds against the US dollar, and what an interesting situation we have on the GBPUSD in the last 48 to 60 hours of this week. At the beginning of the week, it didn't start very well for us as we had a couple of buy positions which was taken out in a loss before that strong bearish momentum came in from yesterday, and as a result we were able to have two active sell position throughout yesterday's trading session. But at this point in time, all sell positions are being closed with a reasonable amount of profit, and for those of us who did capitalize on this opportunity, well done and kudos to you. And you might be wondering or asking, why did we have this strong bearish momentum? What was the reason behind this? And will that reason continue to suffice as we head into the second half of the week? I want to believe that this bearish momentum also received some support from the Federal Reserve Chairman's speech, where he emphasized that interest rate cuts will be gradual, and this has further strengthened the US dollar. And his remark also clarified that the recent aggressive interest rate cuts would not be repeated, leading to more modest future changes. And if we look at this from a technical standpoint, it's expected to continue to favor the US dollar. However, from the other side of the pond, the Bank of England policymaker Megan Green on Monday hinted at further interest rate cuts as inflation moves in the right direction. So in the United States, inflation is stabilizing, is gradually decreasing, which potentially will favor the United Kingdom economy. Now, with that said, I still think that due to the potential stabilization of the United Kingdom economy due to the easing of inflation, we could see this attract more investors into the economy. Now, on Monday, we saw the GDP for the UK come in, though lower than market expected, but there was an expansion which buttresses the resilience in the UK economy at this point in time, which for me would not make me want to ignore the potential that buyers can actually come into play after over 2 years of uptrend scenario in the GBPUSD market. Now, as it is right now, market participants will be looking forward to the US ADP employment change report coming up later today, and of course comment from Federal Reserve officials for future market direction and opportunity. And to help us navigate this dynamic, or help us position ourselves on be on standby for whatever will be happening as a result of this event, I have a simple trading setup to help us navigate the structure. In fact, I have an entirely new one. I think on the lower time frame. We are going to be looking at that in a moment. And before that, what potentials does seller have in this market? We have neutral interest rate concern. As Green noted, it may have increased since the inflation shock, adding uncertainty around the Bank of England policy adjustment. So for me, I still want to hold on to a bullish bias here. Remember, we talked about this in my weekend video on the GBPUSD, where I did emphasize that the British pound has been doing very well against the US dollar since the beginning of this year. And after taking into account what happened since the beginning of this month, you can see price had consistently found higher highs and higher lows, and to further buttress this, we connected the pivot lows, and look at how beautifully this ascending trend line had played a significant role. Now that price action has broken down that ascending trend line here, theoretically speaking, we do expect that some point in time price may likely come back to retest the structure in an attempt to continue the downtrend or even continue that uptrend move. And while price is around the 1.325 in the last 1, 2, 3, 4, 5, that's about 20 hours, because we are looking at the 4 hours time frame, we have noticed that despite that strong bearish momentum that happened yesterday, sellers have been finding it difficult to break through that area around the 1.325, resulting into some buy pressure resume around that area. Now, will this be the beginning of a retracement of this impulsive leg back into structure? Well, we don't know unless we look out for structures to help us navigate this. So as a result of this development, I have a new trading setup. I think it's on the 1 hour time frame. Let's go into that quickly. So scaling down into the 1 hour time frame, this was what I was able to come up with. And what I did here was to take into account the character of price action in the last 1 week. Since last week Wednesday, you can see we have a trend line which has played a significant role in determining the direction of price action. Look at, it was a selling niche here. We had sell from here before price broke out of the structure during the last week of last month, and since that moment price maintained above the trend line before it broke it down again yesterday, and it appears it's about to break out of the trend line once again. Now, in addition to this trend line, here is a simple trading setup we are going to be using to navigate the structure today. And like I did mention earlier, that the 1.325 area had continued to be a barrier for sellers in the last 20 hours, which could evolve into a reversal pattern that could welcome buying opportunities anytime soon. And if you look at this closely, you will see following this impulsive move, we saw price come into structure, and it appears we are looking at a reversal setup in the form of a double bottom structure. And whenever we identify this kind of setup, the next thing we want to be doing is to mark out the neckline that needs to be broken to validate the reversal setup. So we have our neckline at this 1.32950 area, where I am looking forward to price breaking out of this structure to welcome buying opportunity. And in fact, if price breaks out of this neckline, it would also have breached and broken out of this descending trend line, giving us signs that this trend line may no longer have the capacity to continue to negate the bullish attempt. So buying for me on the GBPUSD today is above the 1.32950 area, where we shall be maintaining a bullish bias from that particular area, and stop losses of course will be at the previous low. So we are looking at between 25 to 30 pips of stop loss right below that descending trend line to navigate this current bullish expectations today. So personally, I do have a buy stop order above the 1.32950 with the hope that price will continue to the upside. However, if this is not the case and sellers continue to maintain the bearish momentum from yesterday, what are the chances for me to join a downtrend move? Well, I would like to see this range bound structure get broken to the downside, where the support line at the 1.32500 area needs to be broken and retested. So for me to join a sell, I would like to see price take out the bias from this particular area. Then I can feel very much comfortable to continue the downtrend move. So you can see how crucial this current structure is. Our center of focus for today's trading session is between the 1.3295 and the 1.325 area, where depending on the direction of the breakout will give us an idea of where price action is likely going. So this is my simple view on the GBPUSD for today. I hope I made myself clear. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking another break right now. Let's see if there are any questions. If you have or you need some further clarifications, feel free, drop them right in the comment section. All right. So in the absence of no questions, let's move on to the final asset on our watch list today. So the final asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And of course, after missing out on that sell position at the breakdown of the 2,647.50 on Monday, gold prices rallied over 1% yesterday amidst growing tensions in the Middle East, and this led to us scooping over 400 pips in profit with a minimum of 2 buy positions. And for those of us who are part of this profitable journey, well done and kudos to you. Now, before I go into what really happened yesterday, let's look at what happened at the beginning of the week. What structures were we looking at, and how did we intend to navigate it? Now, at the beginning of the week, the price of gold started with a strong bearish momentum. As we saw, price dropped significantly from the 2,666 area, which lines up with that descending trend line, and for us that could have been a signal that probably price wants to start crashing, considering the character that is expected around uncharted territory. Price dropped down a little bit, leading into a range bound structure. As you will see here, price was confined within the 2,666 and the 2,647.50, emphasizing the prevailing uncertainty at that point in time. And you know how we treat our range bound structure. Whenever this is identified on the chart, we either wait for price breakout of the resistance line, giving us buying opportunities, or breaking down the support line to give us selling opportunities. And I did remember mentioning that I will not be jumping into a sell right away, except you're scalping the market. But from a long-term perspective, I would rather want to see price break down, retest the structure before jumping into that position, which obviously never happened. And as we see here, price after testing the 2,625, we had a demand zone around that area, which continued to negate all attempt by sellers to break through, giving us a room that buyers may likely be coming into play. And during my commentary yesterday, price action was around 2,643, right around our key level. And you know how we use our key levels. Our key levels usually serve as a yardstick guiding our trading decisions for that week. So if price trades below the key level, we look out for selling ideas, and if price breaks above the key level, we look out for buying ideas. And I can remember mentioning in my commentary that we are at a crucial juncture, a make or break point, where depending on how price reacts to the structure will determine if we are going to be buying. Hence, we need a follow through signal for us to jump into that position. And in order to help us navigate this crucial juncture in this market, I was able to identify a simple setup on the 15 minutes time frame, which I immediately shared with us on both my TradingView and Telegram platform in anticipation of yesterday's event. Now let's look at this together, and let's look at what the structure was saying at the point of dissemination to you guys. So right here, I think, was it on the 15 minutes time frame or on the 1 hour time frame? I'm not sure what time. I think it's on the 15 minutes time frame. I can remember it's on the 15 minutes time frame. This was what I was looking at yesterday, and I updated us with this critical structure, where I did emphasize that that area between our key level and the 2,329.50 was a crucial point to see how the market is going to be reacting to the structure. Is it going to be a retest of the structure that will incite continued selling pressure to push price to the downside, or will it be a breakout of the structure to welcome bullish idea? And it appears to be the latter that happened. We saw price break out of the structure, and in fact, if you had missed out on that opportunity, the market gave us multiple signals. We had a first touch, we had a second touch before that bullish momentum came in yesterday. And as you will see, price moved significantly in our favor. We added another buy positions at the breakout of the 2,647.50, riding it all the way up. I personally placed my TP target at the 2,680, but price returned at around the $2,672 area, dovetailing to over 430 pips from both buy positions. And for those of us who capitalize on this opportunity, once again, congratulations and kudos to you. And ever since that, even when I was scalping the gold market yesterday, I did mention at the end of my scalping session on the Go challenge yesterday that I will be staying clear of the market as we begin to notice some choppy market conditions around that area. So we waited and said, let the market play around, and tomorrow morning we will be coming back again into the market to see what has happened. And in fact, this morning I was very excited to see another beautiful trading setup emerge on the chart, and as a result we have a new technical setup to navigate this current structure. Now, if you remember my 15 minutes time frame chart from yesterday, look at that trend line we initiated here, and it appears price is respecting that trend line in an attempt to continue that uptrend move. So it appears the retracement of this move from yesterday has ended, as you will see continued buy pressure from this area, resulting in a reversal setup in the form of a double bottom structure. Now for today's session, I have a simple structure to help us navigate today's market, and here we are. Okay, I already had a buy stop order for the scalping of the gold commodity. For those of you who are going to be with me during the Go challenge, you will be seeing this in a moment, but let's run through that structure I was talking about to navigate today's session. I'm not sure where that is. Hold on a second, let me find. Oh my god, I don't think I can find it anymore. I had something new this morning while I'm not sure what happened here. I had something new this morning. I don't know what happened here. I must have mistakenly deleted it. Okay, it's okay. Let's look at the structure together from this point, since I can't find it, so I'll just have to regenerate that structure all over again. So like I was saying here, we are beginning to see another setup evolve on the chart, welcoming new long-term trading opportunities following this impulsive bearish leg, as you will see here, and price appears to be evolving into a reversal setup. Now with this in mind, we having when we identify such reversal setup, we want to be marking out the neckline of that reversal setup, as the breakout of that structure will be all we need to continue that uptrend move. So here we have it. So we have the $2,655.50 level. So you do want to be marking that level out on your chart. So we have $2,655.50 level marked out right here. So this is our neckline for this current reversal pattern we are seeing here. So let me give a visual representation of what it's looking like. So we have the bearish impulsive leg to the downside. Price came back into the 2,655. We saw the second attempt by sellers to break down the previous low, which appeared to have failed, resulting in price coming back into the structure. So with this reversal pattern in play and price action sitting above the ascending trend line, we definitely want to be looking out for patterns and structures that support the idea of buying. Now for us to buy here, placing a buy stop order above the 2,655 is looking promising at this point to continue that uptrend move. So placing a buy stop order, and please ensure you have enough bridging space for price action to move around. Let your stop loss be way below that ascending trend line. So for me, let's look at how many pips that's going to be. Between 55 to a maximum of 70 pips is looking promising for this swing trading approach. So placing a buy stop order above the 2,655.50 is very beautiful for us to go. Now if you are joining us for the first time, we that we've been part of this profitable journey have a leverage already, as we can easily place a buy stop order since we are very profitable on this asset. So we can leverage on some of the profit we had made so far this week to test waters around that area and see if it's going to work. And if it doesn't work, we know that we are only risking some of the profit we have made. But if you are new with us and this is your first time, you do not have a leverage, well, I will expect you to wait for price coming back to retest the structure on our lower time frame too before continuing that uptrend move. I hope I made myself very clear there. And in terms of TP target for this current buy position, since we are joining an uptrend continuation here, bringing out our Fibonacci extension tool to project this impulse leg that started from here, we will be aiming at an area between the 127.2 and the 1414 area, which will be around the 2,693 and the $2,686.50 level. So let's do that quickly. So we have potential TP target for buyers, and this area could also be a sell window. So we are looking at 2,693, right? 2,693, and then we are looking at the 2,686.50. all right, so we have 2,686.50 right there. So this is where your TP target is good. Anywhere around this area is looking promising to place a TP target. So we are looking at a minimum of about 300 pips to a maximum of about 400 to 500 pips thereabout. Let me see. Okay, about 375 pips thereabout. I hope price will get this far anyways. I'm not sure if it's going to get that far, but let's use this as a yardstick to mark out TP target area. Now, in as much as we're looking out for buying opportunities, we don't get too carried away with the fact that this is what is going to happen today. In fact, the financial market is an uncertain environment, and we want to be on standby for whatever opportunity the market will present to us. So if it's going to buy, we want to be on standby to prepare for it, and if it's going to be a sell, we obviously want to be on standby to prepare for it. Now, in this case scenario, what are the chances that sellers can come into play? And if they do, what are the things we are going to look out for us to jump into a sell position? Well, the trend line I talked about earlier is really going to be playing a significant role here. Now, if I do correct the trend line here, look at what we have. This trend line here has been supporting this bullish momentum since the beginning of this week, and you can see what has been going on here since the early hours of today. The trend line has continued to negate sellers pushing price to the downside, and if this continues, it welcomes buying ideas for us above the $2,655.50 level. However, if this trend line is breached and broken to the downside, we might be in for a crash today. Now, if that is going to be the case, how are we going to be jumping into this move? So I will be marking out a level right below the trend line, which I want to see. I want to actually see price breakdown, retest this trend line before jumping into a sell position. And if we look at this level right here, I think we are looking at 2,649. Okay, so we are looking at 2,649. So let me just mark that out. 2,649, that is it right there. You want to be marking that one out too. So we have a range bound structure already just along that trend line, where depending on the direction of price action today will further support either a buy or sell from this particular juncture. So like I did say earlier, we are looking at price breaking out of the neckline of that potential reversal pattern, and if that is not the case here and instead price drops below the trend line, then below the 2,649 will be a promising area to continue the downtrend move. So let's mark out this level. It's a simple setup to navigate the market today, as we are going to be focusing on this area between the 2,655.50 and the 2,649 area to capitalize on the next move that happens today. Remember, we are looking forward to the ADP employment data coming up later today. It's going to be playing a significant role in laying a platform for what the interest rate decision for next month is going to be, and this is likely going to be shifting the sentiment in the market to favor either the buyers or sellers ahead of the NFP. So let's see what is going to happen around here. And for those of you who are part of the Go Challenge, you are going to be with me together as we will be navigating this market dynamic from a scalping approach. So this is my simple view on the XAUUSD today. I hope I made myself clear, and I encourage us all to mark out these levels accordingly on our chart, as we are going to be needing them as a reference point to navigate the current market dynamics today. If you have any questions whatsoever, feel free to let me know in the comment section, and do not forget to give that video a thumbs up. Your likes are a form of inspiration to me to continue to do more of this, and not only that, it also helps the YouTube algorithm to push the video to a wider audience of traders who may find this content beneficial to them too. So let's make the like tally with the number of people on board, and thank you very much as you do so. And for those of you who had already clicked on the like button, thank you very much from the bottom of my heart. I really do appreciate your support. So let's see if there are any questions whatsoever before we start rounding off on today's Forex Money Mastery. See you soon. All right. So in the absence of no questions, I guess we have come to the end of today's Forex Money Mastery. It has been a wonderful moment with you guys. I really do appreciate every single moment I had with you today. And this week has been quite interesting for us all. We've done pretty well across the asset we're monitoring this week. The USOILSPOT did very well in the last 24 to 36 hours, though we had started the week with a couple of losses on that one. The same thing with the GBPUSD. We started on a couple of losses before we were able to recoup whatever we lost, and of course made some profit on top of it. And well done and kudos to you. And finally, on the XAUUSD, which is also one of the most profitable assets on our watch list, we were able to ride another wave of momentum all the way into the 2,678 area. And of course, we are looking forward to the potential that this trend will continue again today. And of course, if it reverses, we've already identified structural patterns that will help us navigate this dynamic today. I hope you are able to mark out those levels accordingly on your chart. If you have done so, well done and kudos to you. So all we need to do right now is exercise patience and allow the structures to mature. And always remember that trading the financial market is a risky business. Every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place. And for those of you who join in for the first time, you're highly welcome on board. Very glad to have you here with us. I hope you were able to gain one or two things from what we have discussed so far. And if you did, you want to be part of our subsequent edition. Trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach, which eventually you can use to develop your trading strategy, irrespective of whatever type of trader you are. So I look forward to seeing more of you same time on Friday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well this asset have been doing, and of course prepare for the last trading day of the week, which promises to be another exciting one, as everyone will look forward to the NFP data as they prepare rounding up the trading activity ahead of the weekend. So see you guys then. And it's on this note, I want to wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.